Hello, folks, and we have a crypto signal that is pointing that we're going to have a big altcoin crash before we have a big pump, the final pump of this bull run. And it should happen soon, and it might coincide with a big Bitcoin drop. Probably it will. And the big Bitcoin drop may be like 10%, but alts are going to dump a lot more than that. Here are the signals, or the signal of a possible big altcoin crash in the near future before we pump back up. First of all, it has to do with Ethereum. And obviously, a lot of altcoins tend to follow Ethereum because, Ethereum has a lot of the DeFi money, and the ERC coins actually have a lot of the TVL, and ERC still has more market influence than anything else. So when Ethereum goes down, ERC goes down, and that sets the sentiment for the rest of the industry. But Ethereum is at a make or break point as open interest soars to all-time highs. Now, generally, I think open interest is a bullish sign, but soaring to the all-time high, that means open interest is going to be very, very volatile. So Ethereum has mirrored the broader cryptocurrency market's recent downturn, with its price declining by 4% over the past week. As of today, Ethereum trades at approximately 3,598, reflecting a 1% decrease in the past 24 hours. That's not very much, but there's a lot of open interest, which means a lot of people are there to buy or sell, which could move the market a lot. New insights from on-chain data suggest heightened market activity surrounded Ethereum despite its failure to reclaim the $4,000 mark. I think the highest Ethereum got was like 3,900. And of course, there is unprecedented levels of open interest on transactions on the network. So crypto quant analyst Crypto On Chain reported that Ethereum's OI on Binance has recently reached a record-breaking $77 billion. And open interest measures the total number of outstanding derivative contracts. When you have a lot of secondary contracts like derivative contracts, it tends to increase the volatility of the market, which means it can go up or down a lot. So there are probably some people that be shorting right now because there is a lot of selling pressure. The surge suggests that more capital is entering the Ethereum futures markets, but that's not the same thing as the spot market where they are just buying. So if you look at the market order activity, there is bearish signals right here. There's definitely like way more negative than positive. So that kind of signals like a big Ethereum drop soon. And that's what we actually have here. They're saying that at least the local Ethereum top is in. The sell pressure hits 419 million, which is the second highest ever. And obviously, part of that is because Ethereum price is high, but you can't ignore it because that generally means we're going to go for a short-term dump. So Ethereum net taker volume is hit negative 418.8 million, the second largest daily sell imbalance ever. Price is retesting a major resistance near 4,000. It's no longer 4,000, it's 3,600. Ethereum could drop 25 to 35% towards key trend lines by September. If we actually cascade down about 30% on Ethereum, I think the rest of the alts will actually follow. And some of the smaller alts will drop harder than Ethereum, which means that is the opportunity that you have to pick up really cheap altcoins. So as of Tuesday, Ethereum's net taker volume dropped to negative 418.8 million, the second largest daily outflow ever, with 115,400 more Ethereum sold than bought via market orders, according to crypto quant data. So people have pumped up Ethereum. Now they're cashing out. So if you see the Ethereum ERC 20 coins dropping, that's probably why. But that does tend to affect the rest of the market. These taker trades prioritize execution speed over price, which means they are paying the fee to actually just to get executed, typically indicating urgency or fear. When taker sells volume vastly outweighs taker buys, it often suggests capitulation or heavy profit taking. Such massive sell side imbalances have historically marked local tops, wrote crypto quant analyst Martin, casting doubt on the sustainability of Ethereum's current rally. So if there is like a 30% correction, I wouldn't be too surprised. A 30% correction would put us back down at about $2,000, I think $500 or like $2,600. That would be a devastating drop, but it wouldn't kill the bull market because remember, Ethereum hit like 1,300 at the bottom of the bull market, and we were at 2,600 not too long ago. Obviously, we have the drop from February to April, if you can see right here, where we dropped from like 3,800 right here to like 1,500 or something right here. basically at the beginning of this year. If you look at how much we actually dropped from the top in February or January, February to the bottom when Trump announced the tariffs. And that is a massive, massive drop. I don't think the drop will quite be that much, but it could be a significant amount right now. And definitely you would see the volumes go up. Ethereum faced a similar setup in December 2024. At the time, the net taker volume turned sharply negative, and Ethereum also traded near this same resistance zone. That what followed was a 66% decline, with the price collapsing towards its 50-day, 50-week, and 200-week exponential moving averages of the EMA. But here's the thing, like that obviously happened because of Trump tariffs, and even though Trump has a crazy-ass new tariff right now, which I'll basically explain in a while, it's not going to be that bad as the first hit, so I don't believe we'll actually crash that much. It would really, really suck if we actually crashed that much. It really would. The Ethereum transactions are actually near an all-time high too, and that's amid surging stablecoin and Uniswap activity. So people are actively buying and selling, but right now there is a lot more sells than buys. So obviously the increased activity from stablecoins USDC, USD Tether, and decentralized exchange Uniswap, and part of that I do think is because of things have gotten a little bit more bullish, but also the SEC has actually declared stablecoins not securities a while ago, so people are more free to actually use stablecoins. Plus, they determined that some stablecoins, the USD-backed ones, are actually digital currencies. So they're moving more towards the currency field. Right now, that would basically be all the stablecoins we know: USDC, USDT, RLUSD, and a lot of the other. I think there's USDS or something like that are all dollar backed. And of course, the SEC's Division of Corporate Finance has issued interim accounting guidance that some stablecoins with clear redemption rights may be classified as cash equivalents on corporate balance sheets. So obviously corporations basically feel comfortable using them too. And I think that's kind of fueled the Ethereum rally. Well, there's a lot more sell pressure now than buy pressure now. So the Ethereum rally might temporarily be over. Just the taker over the maker volume should actually make traders nervous. And of course, despite the big overarching tariffs, Trump can't stay away from his tariffs, and he just announced 100% tariffs on chips. And then, of course, that's going to hurt crypto miners, which will probably hurt Bitcoin overall, and that will take down the market. So President Donald Trump announced on August 6th that he will impose tariffs as high as 100%, folks. That's the highest I've seen so far, on imports of chips and semiconductors to the U.S. Remember, Taiwan does make a lot of our chips, and that could actually make computer prices go up too. Only those manufacturing these products in the U.S. can escape this charge, he added. Trump told reporters in the Oval Office that the new rate would apply to all chips and semiconductor imports except those from companies that have committed to manufacturing in the U.S. So I think some companies are just going to BS commit, and then when Trump's not president anymore, they will probably back off. As reported earlier, the Bitcoin mining industry has taken a hit due to Trump's tariffs on chips, which does affect the hash rate. Mining is a process of using high-tech software, blah, 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 to mine chips, obviously. While the U.S. is the world leader among crypto mining countries, it is Asian countries such as China, Indonesia, Malaysia, and Thailand that are the key manufacturers of mining rig equipment, Bitmain, Antminer, things like that, on which even the miners based in the U.S. are dependent. So I think the sudden shift is going to be very harmful to the industry. It's not only the crypto industry that's going to be hit by this, it's also the AI industry that's going to be hit by this as well. So I think this will actually have an impact on crypto mining, and of course, a lot of the AI stuff as well. So not really good for the industry. I'm not a huge fan of this, and I think this will contribute to kind of this dump if it's actually coming. I definitely do think we are actually going downward because of the massive sell pressure on Ethereum right now. And of course, takers having so much more than makers. But I do not actually think this dump is permanent to any extent. I do believe that we will actually come back from this very, very strong, just like how we bounced back from that February to April, basically tanking. And we actually bounced back very strong, hit 120,000. My next target for Bitcoin after this is 135,000, and I expect Ethereum to come up as well. Right now, there's a lot of Ethereum outflows. I think there's 10 billion last weekend of outflows, but I think even bigger inflows are going to come in once this slump is over. So right now, maybe the best decision is to sell some of your altcoin bags and then buy back when it gets less expensive to buy back, therefore netting you a gain. Wouldn't do that with your entire bag because there is a chance that this signal is BS, because all signals have a chance to be BS, and we might not go down. So only part of your portfolio if you're going to do this, but there is a lot of selling pressure on Ethereum, and that will actually affect the rest of the altcoin market. And it should be like a month or 2 month lull, which would line up directly with October, November being a huge push. The other thing is we do have good news. The number of crypto salaries paid tripled in 2024. This is like good news, but it's limited good news because this is only in the industry where people actually work for crypto companies. But still, more salaries paid in crypto means more acceptance mainstream of crypto. Obviously, USDC and USDT take up the lion's share of salaries paid. And I do think, like I said, it does have a lot to do with the SEC declaring those two cryptos non-security. So Circle's USDC accounted for 63% of salaries paid in crypto in 2024, outpacing USDT despite its trading dominance. So USDT, as we know, is mainly used for trading. USDC, obviously, especially in the United States, more for these things that, could actually grow it more than Tether in the future. So the number of crypto professionals, not all professionals, crypto professionals receiving salaries in digital assets has tripled over the past year. I do actually receive from BitUnix my affiliate program payment in USDT. They're also kind of annoying if you're listening, BitUnix. Stop paying me in like random coins so I have to convert them into USDT. Just pay me in USDT because they mainly pay me in USDT, but they like throw some Bitcoin or SUI or Cardano or whatever USDC in there too. And it's really annoying. I just want USDT. I don't want those other coins. I can't liquidate them all, and it's incredibly annoying because I just want to cash out with the affiliate payments. About 9.6% are now paid in stablecoins, according to a report venture capital company Pantera Capital. Based on over 1,600 responses from crypto professionals across 77 countries, the report points to a shift towards blockchain-native payroll systems and growing institutional trust in dollar-backed assets. So obviously, people are growing more and more comfortable with crypto payments, especially if they are USDC and USDT. We initially thought this was due, Circle's USDC led the way, accounting for 63% of all crypto payrolls, despite Tether USDTs being the most traded stablecoin by volume nationwide. We initially thought this was due to our survey skewing more Western, the report says. After digging further, we found it very interesting that none of the major payroll providers in this space deal remote rippling offer USDT for payroll. Combined, the two stablecoins accounted for over 90% of the payouts, according to DeFi Llama. The total market cap for all stablecoins stood at $268.6 billion. So USDT, USDC account for over 90% of payrolls. This is why you have to have USDT and USDC on your network, because they're the ones that are actually getting accepted. In terms of according to the report, token-based compensation also increasingly structured around long-term alignment, with nearly 88% of vesting schedules now set to 4 years, up from 64%. So definitely more of a long-term schedule, meaning that the creators are going to having to hold the tokens more, and that is really nice. A lot of this does actually happen because of Circle's enterprise push, which is why they're pacing above USDT. Enterprises, obviously, especially in the United States, are more comfortable with Circle, obviously, than they are with Tether. Tether, for their part, has said that they will actually comply with the regulations, but they still have to get audited, and something could actually happen within that audit. So right now, USDC is definitely the more sure thing. As for the other 10%, they don't really have data on that, but realistically, what's happening is with the other 10% is that it's split between USDS, RLUSD, and a bunch of probably a dozen or two other stable coins that are really small. So that doesn't really matter all that much. So yeah, basically in terms of people paid in crypto, 63% is USDC, 28.6% is USDT, which is about 92%, 1.9% is Solana, and 1.3% is Ethereum. So I was wrong just then. USDC, outside of USDC and USDT payments, most of the other is either Solana or Ethereum. It's interesting that there aren't that many Bitcoin payments out there, but I guess people don't really want companies don't really want to pay in Bitcoin. That makes sense because there's a lot of Ethereum and Solana developers, so they would actually get paid in their native token. So yeah, Ethereum, basically USDC, USDT do dominate that market, and that's why they're going to be the ones that gain liquidity. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.